value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you.
Mike, is gold fever back on again?
Well, it certainly has been the hottest thing all year. Gold and silver, both are up much more than the stock market. The S&P 500, as far as yesterday's close, was up about 7% for the year, which is amazing considering that it crashed over 30% in March. We saw the GDP in the United States contract over 30% on an annualized basis in the last quarter, the worst decline in a quarter that's ever been recorded. There wasn't even a quarter that bad during the Great Depression. Unemployment is still incredibly high, and the recovery momentum in the economy seems to have stalled out several weeks ago, probably this mid-July. Yesterday morning, the consumer confidence also fell to a new low for the year. But you wouldn't know any of that when it comes to the S&P 500. And the bond market also is trading at record low yields, and so are corporate bonds, thanks to Federal Reserve quantitative easing operations that they did starting in March, where they pledged to buy even corporate bonds, something that the Federal Reserve has never done. In fact, no central bank has done it. So this has provided sort of an environment where people feel that I just have no risk. I'm just going to buy anything. But we all know risks can never go away in the financial markets. The March drop showed us that. But with bonds yielding nothing, that provides a very difficult problem for anyone who wants to invest and diversify, because there's no real safe haven in the bond market, and hence enter gold and silver. They're now acting as necessary investments. Not only are they going up more than the stock market, but I think for many people, they're now beginning to replace the role bonds would have in a portfolio. So all that said, though, this month, gold peaked out about the third trading day of the month, and so did silver, when silver touched about $30 an ounce. Very briefly, of course, it started the year at $18, so almost up, almost a double on silver from the beginning of the year. And then the low of March, it was less than 12, so almost a triple from the March low. But regardless, we've pulled back, and there was a sharp decline about 2 weeks ago, where silver went below $24 when it was just at 30 the week before. Gold went to below 1900. And I wasn't surprised that there would be a pullback, because both markets had been extremely overbought. That said, they did pull back more than I thought. I thought gold might fall to 1950. Well, it fell below 1900. But pullbacks are normal. A 5% pullback is something that happens all the time in a bull market in something, which I think they're in. So that's what they basically did. They're still above their 50-day moving averages. And I think when someone wants to trade in the markets, they have two ways they can basically do it. They can try to do short-term trading, in which case you just try to figure out a trading pattern and and you can almost use it for anything as long as you have a strategy for jumping in and out. And, short-term trading's not easy because half the trades don't work. So you got to use some sort of money management trick where you're making sure that your winning trades make more than losing trades and be prepared to lose half the time. It's a tough game. But the other way you can do it is if you invest with a bit of a longer term time frame. I'm speaking at least 6 months out. And when you do that, what you really want to do is look for what's beating the stock market averages, which gold and silver are doing, and then buy on dips, which they have dipped. And it looks like either the dip is over because both are up pretty good today, and tomorrow we're going to have an interesting presentation by Jerome Powell about monetary policy, or the downside from here is fairly low, maybe a retest of the low, which it doesn't really amount to anything. So at this point, I think it's just time to buy, if you're not invested yet. And even if you're worried about, it dipping back down, just buy the strongest stocks, cause they're not likely to do that. I mean, I'm not going to mention it, but I'm looking at a stock right now in the junior mining space that's up 10% for the day. And there's many junior mining stocks in that position, but there's also Newmont up almost 1%. The GDX ETF is up 2%. And last week, we found out that Warren Buffett, who is not a day trader, not a short-term trader, he sold many of his holdings in bank stocks and bought over $500 million worth of Barrick Gold in the last quarter. In fact, it was the only stock that Berkshire Hathaway even bought. So I think, Americans who like to look at Facebook, like to look at Amazon and Apple, like to watch CNBC and hear about the tech stocks, the excitement is fun, but I think everyone needs to think 5 years out and be, in 5 years there will be another decline of some sorts in the stock market, if not this fall, the next year. And gold, silver is going to want to be the safe haven, and you want to invest in what's not only hot, but what's likely to go up when there is another speed bump in the financial system, and think like Warren Buffett instead of a Robinhood app player or something.
Speaking about the Robinhooders, the young millennials using a free trading platform where you can sell or buy portions of shares, which of course makes a lot of things affordable. What are they doing right now, and are they setting any trends, or are they behind the eight ball, as they would say?
Well, it's tough to know. This is something I've been following for like 2 years, and if you would I have an account with them just to have been able to do this, but they would show you the number of people owning a stock or an ETF, and then it also show you a ranking, a list of the top ones and exactly how many people own it. Last year, the top stock for most of the year was Canopy Growth, and it was one of the worst performing stocks in the market. And before that, and then this year, Tesla was at the top, and then in April, it was a lot of stocks like Delta Airlines, stocks that had crashed really bad in March and then bounced back up sharply in April, even though they're still lagging the market. But a few weeks ago, this month, they decided to stop showing you this information. I think they were getting a lot of negative publicity from it, or thought they were. And they just pulled it. So I don't really know what's going on there anymore, unfortunately.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, are there any particular out of the way sectors you're taking a look at that perhaps isn't getting a lot of focus and yet is performing relatively well?
Yes, there are. Not necessarily, well, I'll just say what they are. They're not necessarily sectors inside the stock market. The interesting thing about the stock market is the sectors that look like they could go up, let's say over the next 6 weeks, potentially, are things like airlines and REITs and casinos, sectors that have been lagging, for the entire year. They're not these are the bottom third of the stock market in terms of year-to-date performance. But they look like they could go up on a short-term basis. They've all got these patterns where they've basically been going sideways for 90 days or so, could break out, go up another 10 or 15%. What this would do is help the stock market, I think, stay up or stay bullish, let's say into the election. Because while everyone's fascinated with the technology sector, you really need more than these tech stocks to keep the market going up on a sustainable basis. And these lagging sectors could help. However, I have zero interest myself in buying them. The reason why is because they're lagging the market. I only see them good as for trading. And a lot of these companies are zombie stocks, companies that have so much debt that all they're able to do is use their revenue to finance their debt. They could go bankrupt. The cruise lines are a simple example of this. So I don't think they're good for investing. And I want stuff that I believe can go up for a couple of years and outperform the market. So what are those? Well, besides gold and silver, I think the best candidates are simply individual stocks outside the United States, in Europe and places like Russia. Because those markets, I think, are going to outperform the United States stock market with the help of a declining U.S. dollar. So that's where I'm actually starting to move some of my money into working in foreign markets, because I think the big trend is going to be a falling dollar. That I think gold and silver are just going up ahead of that trend, and they're going to benefit from it along with the mining stocks. But I want to do more than just gold and silver, so I'm starting to look outside the United States for those type of opportunities.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, has oil held up a lot stronger than many suspected with reduced driving over the so-called driving season, and who knows what's going to happen this fall.
Yeah, it's held up better than I thought. We're now around $43 a barrel. Of course, we went to a negative price in April for a day, which was a strange thing to happen. But, it was obvious that wasn't going to be sustainable and we'd have some sort of rally back up. I thought we'd go to 30 or something, but we've gone up higher to 43. And I think, we've seen the bottom of oil in our lifetime. I don't think we can go negative again. And historically, gold and silver are part of a commodity cycle where they go up first, and then soft commodities start to go up, agriculture, food, cotton, and so forth, and then energy after them. Well, we're starting to see the soft commodities start to go up. For example, the DBA ETF, which I have a small position in, it was $13 and a quarter in June. Today it hit $14.50. It's just 30 cents or so away from its 200-day moving average. So it appears to be starting to go up, and that would suggest to think, I don't know, if oil is going to break out and take off this year, but I do think, it's probably going to be in a healthy range, and maybe it'll just stay here. I'm not really sure what the price will do between now and the end of the year. I mean, historically, oil does tend to pull back into New Year's, then bottom and go up into the summer. That's the seasonal pattern. But I think, energy stocks, some of them can be bought. Some of them are lagging. Even Exxon is, as we're speaking, testing its low of July. But some of the other energy stocks are doing better. So I think it's a sector not to expect big gains necessarily this year, but I do think it will go up and be a good sector over the next couple years.
Does a person in this kind of environment have to change their investment strategy?
Well, yeah, I think so. I was about to say no, but the problem is the bond market. Most Americans that have investment advisors, and I think it's the same story in all countries, but most investment advisors, what they'll do is say, okay, put X amount of your money percentage into stocks, typically in the home country, and then put another percentage into bonds. And a big chain of investment advisors, I think the biggest in the United States, say 50-50. And they do this no matter what your age is. Just 50% stocks, 50% bonds. Well, the problem is, it's just the Fed is almost ruined this, because by making interest rate zero and buying bonds themselves through ETFs and other measures, they've rigged the bond market. So yeah, it's good for corporations if they want to borrow money, but you can't make any return as an individual investor. It makes no sense to buy a 10-year bond and not even make 1% off that money. It's almost a crime what they're doing to people, or forcing people to do to try to be diversified. And the danger is that, okay, you buy your bond and you're locked in at this super low rate. You think, well, it's safe. My bond won't go down in value. The Fed's even there to prop the bond market up for me, so I can't lose money. But you'll lose the value of the money because of inflation. And soon, if not, this week, Jerome Powell is going to give a speech and announce that he wants inflation above 2% for years. Well, that's going to guarantee that anyone locked in these interest rates is going to lose the value on their money. So, what is supposed to be safe investing, put your money, a portion of your money in the bond market, guarantees losing value on your money, guaranteed losses. Yeah, and so you got to do something different. Hence the simple solution, gold and silver, but, other commodities also, if you want. You mentioned oil, and I mentioned, trying to invest outside the United States a bit. So we are, I think, forced to think of ways to diversify that doesn't involve, bonds and CDs.
Any suggestions in that area beyond gold and silver?
Well, look for stocks that are paying decent dividends that will benefit from inflation or a falling dollar. I think that's the key. And, that doesn't, Apple isn't on that list. Apple doesn't even pay 1% of a dividend, but there are, energy stocks do. In the past, in the 1970s, there was a period of, very high inflation, and REITs were among the top sectors that year. Real estate investment trusts. I can't say buy REIT ETFs or just blindly buy them because of what's happening with the economy. I don't want to invest in a REIT that owns shopping malls in which half the stores are going bankrupt because of the pandemic and because of Amazon punching them, stealing their business away. But, you said people would have to figure it out, what REITs are worth buying, and avoid ones that hold empty office buildings too. There's a REIT that owns a shopping mall in Las Vegas and empty offices in Houston. That's not one you'd want to buy, but maybe one that's got apartments or nursing homes or something would make sense.
Mike, anything going on with Bitcoin?
Well, it's floating up and down. It's hanging around the 10,000 mark. It's 11,446. It crashed in March when the stock market fell. It fell even more than the stock market. It was at 10,371 on February the 14th, right around the time the NASDAQ peaked, and then fell below 5,000. So it fell 50% when the S&P 500 fell, like 33%. And then it's rallied up, but it's lagging the price of silver. It's lagging the price of gold year to date, underperforming both. It's underperforming even Facebook and Tesla. So to me, Bitcoin is something that simply, it's not a safe haven because it falls when the stock market falls. What it does is just act more volatile than the U.S. stock market. It goes up usually more than the stock market when it goes up, and crashes more when the stock market just has a correction. And then when a stock market has more than a correction, like we had in March, Bitcoin completely collapses. So to me, it's just something, if people like big movements, and gyrations, it's something to play in that sense. But other than that, it doesn't, I don't really buy it. I don't, if I wanted to just increase the risk I want to take, I would just buy options or something on the stock market, instead of Bitcoin. To me, it's sort of the same thing. And if you buy stocks, you get dividends. It doesn't make much sense to me, but I know a lot of people really like it. So, if you're a master at trading that, the lister, that's good, but, it's a lot more difficult than I think people, say it is.
Mike, thank you so much for chatting with us.
Oh, thank you. Good to talk with you and your audience.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.